Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It is September, I believe this is the 17th, 16th. I'm sorry, I'm trying to give away a day there. Today is the 16th, and this will be our chart lesson for today. It was an FOMC announcement day, and generally I tell people to be flat maybe an hour before going into that announcement, and then once prices kind of get back to normal, you can start trading again. So that would be this blue area here that I felt like you probably wouldn't want to be in. So a lot of times what'll happen that last hour before the announcement, it'll go sideways real tight, kind of like that, and you'll get in a trade and you can't get out. And so I think it's wise to be flat about an hour before going into FOMC. That's one of the only ones I recommend. There's some other high volatility ones that you probably want to be flat, but generally that FOMC announcement, and you'll see a lot of, they'll have them high volatility a lot of times too, but you'll see a lot of FOMC speaker notes and things like that. Don't worry about those because those are just people speaking, and there's always a chance they could say something during their speech that could affect the market, but you can't time that. It's not like an announcement that it comes out at 1 o'clock that says, hey, we raised rates or we dropped rates or anything like that. So don't worry too much about those speaker announcements, even though they're red. You probably want to be aware of them in case something crazy does happen, because sometimes they'll say something that might surprise the market, but it's not like the rate announcement. So just remember that. But mostly we were sideways today. We really, up until 2 o'clock, we just traded within the overnight highs and lows. We broke a little higher here, so you'd expect prices to probably pull back again. You just had trends up and down here. You really were better off to play these shorter term blue ones. This brown one's in play, but you didn't really get a lot of play off it. You were better off just trading the new ones. It would have been nice to find the brown one if you could, but really you didn't find it till the swing here, and then it's pretty much over after that. So it didn't really help you a whole lot. But the shorter term blue ones were the ones that you really needed to trade. So let's back out. We'll go through the trades and we'll wrap it up. Try to get way on out here so it's easy to see. But 7 o'clock came right in this little upswing right here. And so you get a trade right out of the gate, a nice second entry. And if you catch this, you can ride this all the way down. That may be the only trade you need today. I mean, I'll just tell you, there's nothing greater than getting a trade right when you first come in to sit down and getting a setup, and then being able to let that get a nice runner, and that may be the only trade you need for the day. It doesn't happen a lot, but it happens, it happens occasionally. So more than occasionally, really. You're not going to get that lucky every day, but when it does happen, it's pretty nice. And you can see this trend working up. You get the close outside a new high, and then we're just working down. This one's running down. You get the close outside new low, and then we're going up. So perfect price action right out of the gate this morning. Easy to see fairly if you just draw your trends off the first two swings. First two swings, I start at the high, and then I usually work off the bodies for the secondary one. So this one might have been even a little steeper here, but I left it where it was here, and it works out perfect. So, but anyway, you get a nice second entry short just after 7 a.m. when we're looking for a reversal. You'd expect another leg down after that leg down at a minimum, even if we're going higher. And so you get your nice second entry short, and that's a nice, that's a 6-point move or so right there. So then you get your failed second entry short here, which confirms that trend line. You draw it off the first two swings, that confirms it. So you don't care about your signal bar there. That's going to trap people most likely. And off to the races it goes. So there's two quick, easy trades right out of the gate. And then we just started working sideways here. Notice there is a new low, first entry, second entry, and it's starting to look a little bit congested, but if you move that all the way to the right side of the chart, it's looking a little congested, but it's still a second entry right off the key entry point that's been strong so far. And this actually breaks higher and turns down, so it's probably going to trap some people. So uh, what I would recommend when you notice it starts going sideways like this, you got to be real careful. You might have exited this one and just taken what it would give you, a tick or two, once you realize you're in this range. If you'd held on, it would have worked. But personally, I'd probably exit that one. I'd take a tick or two, whatever it would give me, and I'd get out and look for a better entry. And you actually come back and get another break higher here, and it turns down. But the signal bar doesn't end up very good. There is a little triple test there. If you had a good signal bar, go short right there because you got plenty of room to scalp out. But it doesn't look very good on my chart. So I hated to miss that one, but that's just the way it goes. And you don't really want to go long here either because you got a nice trend working down, and that would be a counter. Even though it's a little range, it is a long way away from the EMA. So, and we've been away a while. It's really tempting. You could probably mark that green, but I'll be honest with you. I wouldn't take a. I'd just tell you to wait because you don't really have a close outside. You could say maybe we closed outside and we got a new low here. And actually, if you did draw this a little steeper, which you could have, you do get a break outside here, and then you get two legs to a new low. And so that could be correct. It still fits nicely here. So if you saw it like that, or if you took that one, that's fine. And this may be actually correct because this way you get two legs down. And then we reversed here. Now, you really wouldn't have had this brown channel. So at this point, all you were playing was this blue channel, and you got a break and two legs down. And so now you're getting a first entry and then a second entry here. But this is really congestive. I circled this because I didn't want to forget to talk about it. Somebody sent me an email first thing this morning asking about this, and there were a couple of questions in the forum. I think some people took this same trade. So, and I told that trader to just relay in the forum. So he relayed probably what I explained to him. But as you can see, you've got the channel working down, and you got a break and at least a leg and maybe two legs down. So with this being congestive, don't enter here. Because what will happen is you'll take this second entry just like you did, and you get trapped. So, but I guess what the trader asked me, he says, it was a failed second entry, so then I took the reversal. And he asked me if that was okay, and I would say no, even though you might be looking for a reversal here. This is not a good reversal pattern because it's all below the EMA, and that's congested because it'll often fail. And notice how it fails right there. It tries. It ends up going higher because the bigger brown channel's in play too, but that's not a good place to be going long either. So I just sit tight right there, and you can clearly see this channel working up, and you get a lower high here that breaks higher, but I don't think you want to enter there because that was a pretty strong channel, and that's your first break, and you'll probably see prices try to at least make two attempts to go higher, and there's the second attempt. And that's a reversal pattern. I like going short there. Notice your new high, and you try to go higher once, and you try to go higher twice, and it fails. Good place to go short. And you actually come back again, but by this time, now you got to wonder if this is not a little range here. I didn't draw the lower line. It's something to even consider somewhat right there. But it really it looks like prices are trying to go higher again to me. And with this being a downtrend, I like taking this trade. I'm a little less hesitant now because we're still going sideways here and we didn't take on off. So it works out, but I'm a little hesitant on that one. And you really just don't get another entry here until right here. And the reason I like this one is because you made that high, you test it once, and you come back and you test it again. And so you got a little triple test. It's right off the EMA. It's a nice bearish bar. And it's the first break of this channel, so we'll probably try to make a new low. And if you draw your little uptrend line there, you really don't have enough bars here to draw this. You need at least 3 bars. But you can see if you go off those first 2, you get outside here and make a new high and then turn down. So it's It's a little hard to see. It's not real clear, but the clear thing is you're going down, and that's the first break, and that's a great signal bar and a triple test there. Again, you made that, you came back here, you came back again, and then you came back your second or your third time for your double test of that high. And then we run up here, and you get a first entry and then a second entry. And I was a little hesitant on this one because of the brown channel. But generally, if this was going to be a good trend channel, that third touch should have held. And it didn't even check up there. It just shot straight through and pulls back. It gives you that failed second entry, and it does confirm that trend line right there. So I like taking that one just to see. That looks like one leg up, so you would want to see if we get a second leg up at a minimum. And there's leg one. And leg two would be way up here. And prices just, they keep going a little higher. And then we get another, we made that out, we test it once, we test it twice, so you got a little double test there. And then you try to go higher even one more time. And so it's starting to look like a range now. So you get another, you actually get a second entry short off that new low. And I like them both. And then, of course, you made a new high here. So then you get a first entry and then you get a second entry. There's your another reversal pattern. This has been a range day. We're probably headed down again. And off it goes again. Don't enter in here. It's too congestive. There is a failed second entry short here, but I don't think you want to go short. Really, you probably should have moved this line down by that point. Well, there we go. Probably have it like that. And you can see that little congestive. The high part's probably more like that right there. And then this is a little bit higher. So there we go. That looks a little better there. And that really just takes us right into the 12 o'clock hour. And again, just stay out of this FOMC stuff. This was not a real volatile day. And you can see we got two legs up, and then we pushed a little bit higher and then sold off. And I don't think you want to be going short here yet, but because we're not quite back to the high, but you can just see that kind of going sideways. You don't want to go long or short there. I would still be looking for a long, but there's no long setup. There's just not a good setup there. So then we reverse and you get a first entry long and then the second entry long, and that really looks like one leg down. So look for that second leg. Measure that leg. And you can see we got a perfect to the tick measured leg down. That would have given you a great target. And that took you in 2 o'clock. I did mark this one here. Notice that that's your really your first break there. And that's a new low. So you get a first entry and then this went higher. So that's a second entry all in one bar. It's a lower high. It's a big bearish bar. You're expecting prices to come on down lower. So you may take that trade. It's just right into 2 o'clock. And that leads me to something else. Somebody asked about, and I get that question occasionally. The reason I have this white and dark here is this is our trading time that we're willing to trade, and that's from 7 a.m. Central Standard Time to 2 p.m. Central Standard Time. I don't like trading. Actually, this starts at 8:30 here just to show the regular open, and I start trading around 7. That's when I come in. And it's safe to trade from about 7 a.m. And people ask me too about the 8:30 a.m. Don't worry about that. The price action is always right. Sometimes you'll get your best trades right at the 8:30. So don't skip trades at 8:30 just because you read all these wives' tales about stay out of it. And that's because people can't read the price action. If you read the price action, it doesn't change. So don't worry about whether or not it's 8:30 or not. Just forget that. if you get a good setup and you're reading the chart right, take it. So, but back to what I was telling you, we want to stop trading at 2, which is where this turns gray again. And the reason we want to do that is because I saw somebody post in the forum that they said that they took a loser 5 minutes into 3, and that's why you don't trade after 2 o'clock. Because for one thing, I mean, this was a pretty good move. A lot of times it'll just chop around much after 2 o'clock. Sometimes you'll get some nice moves. So there's nothing wrong with managing a runner. Just don't enter any new trades, because what happens if you take a loser after 2 o'clock, you don't have time to make it up. It's just no time there. So if it's just right at 2 like that one, and there's a really good for sure thing set up, by all means take it. I marked this one green just because it was after 2, but it's, you know, it's like 207 or 208 there or something like that. I mean, it's not much past. But I wouldn't trade much past that, because again, if you make a loser early on, you got all day to make it up, and you'll usually have some good price action. But if you take a loss after 2 o'clock, especially after about 2:30, you don't have time to make it up. So don't trade after 2 o'clock. It's my experience that the price action is easier, and there's less fake outs and less traps and things that are hard to find early in the morning. You tend to get more of those crazy moves and flip-flops later in the afternoon. So, and I don't have any data to back that up. That's just from my experience from trading, from sitting here for 20 plus years watching the screen every day. You start to see things when you do it that long. So, but anyway, don't trade after 2 o'clock. And again, on news days, FOMC, be out about an hour ahead of time, just in case. Today wouldn't have mattered, but it's typically it would matter, and you don't want to be stuck in a trade going into that. What'll happen a lot of times is you'll get a little. See what this looks like right here. You'll get sometimes you'll get an hour or so of that before FOMC, because everybody's nervous and waiting, so they don't want to commit either way. And so if you take a trade in that and you get stuck, you can't get out probably without taking a loss. And then if you don't get out and 1 o'clock hits and this thing rockets off like that, and you're on the wrong side, well, guess what happens to you? You take a huge hit, or you take a hit anyway. You should never take a huge hit, because you know where you're going to put, the rules of where we put our safety stop. The biggest hit you're going to take is however big your signal bar is. So when the market's normal, hopefully that's not more than 8 ticks. But during this volatility, you just can't meet the 8-tick rule. And people, I've talked about this 100 times, and people just seem to miss it. But don't try to. If you can't put your stop 1 tick above the signal bar if going short, or 1 tick below the signal bar if going long, you can't take the trade. That's more important than the 8 ticks. So what people have been doing is they take the short here, and they're thinking about the 8-tick rule, and they got their stop right in the middle of the bar somewhere. And guess what's going to happen to you 9 times out of 10 if you do that? You're going to get stopped out on a perfectly good trade. So don't shoot yourself in the foot trying to follow a rule that doesn't work during high volatility. So if you go to the frequently asked questions page on the website, I got some other suggestions. You can always wait for the trade to trigger and drop a limit order in, see if it'll back up. But guess what? The best trades will not back up, and you'll miss them. So my experience has been the best option is just take the trade like you always do, put your stop where it goes. It actually makes it easier, because you only got to go 4, technically you got to go 5 ticks in most cases in your favor to scalp out, and then there's no more risk in the trade. And you only have to do that before prices often go on a big signal bar 8, 10, or 12 ticks in the opposite direction, and then breaks an important support and resistance by going above or below the signal bar. So the odds are stacked in your favor that it's going to go 4 ticks before it goes many more ticks in the opposite direction and breaks an important support. If you have a loser like that, you're not reading the price action right, most likely. So it's not where you put the stop that cost you to lose. It's just not good chart reading. So I hope that's clear, and I didn't mean to get off on that tangent, but I think that stuff's important. And also I looked for this, This morning when we made this first leg up over here, and when we went higher here, you'd look for a possible. We came close. We didn't quite get it. Possible measured move. And you probably should also look for one down. Same thing. You'd have your leg down here. And once we started lower, you're going to get it. Look for at least a measured leg down over here. You can see we went much further than that. So sometimes on these range days, your legs won't match up nearly as well because prices hit support or resistance or they break out and things like that. So these will work better on trending days, but you'll get some to the tick on days like this too. So always look for them and just pay attention to them. But I'm going to wrap it up. Um, Hard to believe tomorrow's Thursday. We're wrapping up another week already. I don't know where the time's going, but this year's going to be over before we can bat an eye. But I hope you had a good trading day. I hope you're having a good trading week. I'll be back tomorrow to wrap up our week, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.